All right, we're live. Welcome back, everybody, to the Small Business Spotlight Special Edition. It's Friday. We don't normally do this on Fridays, but we wanted to bring on this guy again, Mr. Jonny Price. Welcome back.
The double header. Good to be back.
Yeah, absolutely, man. No, I wanted to give folks a chance to hear from you about Wefunder. We talked about it briefly last time, but I really want to find out more about you and your background, and then also find out more about Wefunder and how you're helping other businesses to grow and build themselves up. So let's start with you, though. To tell us more about you and your background, and then we'll get into WeFunder. Sound good?
Yeah, sure. I'm from the UK originally. Started my career in management consulting after studying history at university. Did that for a few years, then came to volunteer at a nonprofit in San Francisco called Kiva.org, KIVA, really cool organization that does microloans, crowdfunded microloans for entrepreneurs around the world. And while I was working there, I met my wife. So then we got married. I transferred from the London office of my consulting company to the San Francisco office, then left consulting and came back to Kiva full time. That was in 2011, and then basically launched this internal pilot project at Kiva that was bringing that model of crowdfunded microloans to support US small businesses. So we were making loans to barbershops in inner city Detroit, small scale farmers in rural Arkansas, taco trucks in San Francisco, and the average loan was $5,000, crowdfunded by 100 people lending $50 each. It was all zero interest, no fees, no interest, and then the lenders hopefully would get paid back and they could re-lend that money to help someone else. So I grew that team for 7 years, from nothing to in the end. By the end, we made about 5,000 loans. $25 million to entrepreneurs throughout the country. Really proud of what we did. But then basically, there's a new CEO who came in that wanted to take the program in a different direction. So he asked me to step down from running it in early 2018, about 3 years ago. And then that's when I came to Wefunder, which is kind of like Kiva, like crowdfunding for entrepreneurs, but on a much, much bigger scale and offering potential returns to investors. So happy to talk more about Wefunder, but that's kind of my journey of how I got here.
That's awesome. So you've been in the space of funding for pretty much most of your career, other than management consulting, right?
Yeah, 10 years now.
Wow, that's amazing. So then you got to Wefunder. What did you do there? What did you see at Wefunder? What attracted you to Wefunder as a company?
Yeah, so obviously getting more capital flowing to entrepreneurs was kind of what I was doing for 7 years at Kiva. And so doing that on a larger scale at Wefunder was pretty interesting. Wefunder is a public benefit corporation. So you can incorporate your company, right, as a C Corp, an LLC, an S Corp. Wefunder is a public benefit corporation, PBC. And so rather than being legally obligated to maximize shareholder value, like a C Corp, we're legally obligated to uphold our charter, which you can read at wefunder.com/charter. We're a B Corp as well. And so this is that charter. I read it and I was like, wow, this is amazing. This is why I've got to come work for this company. And so there's kind of two sides of our mission, I would say. So on one side, we are excited to get more capital flowing to early stage startup founders, enable more people to take their shot at starting their business, launching their company. We think that's good for society when more people kind of try out entrepreneurship and are able to do so because they can raise capital. And then disaggregating as well. Like right now, 1% of venture capital goes to Black founders, 3% goes to female-only founders versus 80% going to male-only founders, and 77% of VC goes to 3 states, California, New York, and Massachusetts. And so we hope that a more democratic approach to early stage investing, i.e. the investments are not coming from a small number of millionaires or institutions, but rather from thousands of people, in the entrepreneurs community or in the Wefunder investor network. If you have a more democratic approach to raising capital, then you can get more equitable allocations of capital happening and more capital flowing to underrepresented founders, be they women or entrepreneurs of color or founders in Tennessee, where I am. So that's on the founder side of the mission. And then on the investor side of the mission, until 2016, it wasn't legal for ordinary people to invest in cool early stage startups. You had to be a millionaire or an institution to invest in like cool startups. Our founders thought that wasn't very American or fair. So they helped to pass the Jobs Act and get that through Congress in 2012, which then was rolled out by the SEC in 2016. And so now today, anyone can invest in Y Combinator startups at wefunder.com/YC, or anyone can invest in their friend's startup or the coffee shop down the street from them. It's no longer reserved for millionaires and billionaires. And, we think that's kind of a cool, democratizing force that hopefully can generate, more kind of wealth equity over the coming decades.
That's awesome, man. So like as a business owner, if someone's a business owner out there considering a loan from Wefunder, so considering working with Wefunder, what are the things you guys look at in terms of qualifying and in terms of what folks can get from Wefunder?
Yeah, so most of the capital raised on Wefunder is equity. And then we do some loans as well, but most of it is equity capital. And in terms of qualification, I mean, we have some, kind of basic like checklists and fraud prevention, due diligence that we go to. But for the most part, we're trying to be a relatively open platform and, not be the arbiters or gatekeepers of, who gets a chance of trying to raise money from the network or from their efforts on Wefunder. We kind of want to get away from that like centralized gatekeeper model and embrace like democracy. And so we're kind of relatively an open platform. Obviously, if you don't have a business that people want to invest in, then you'll probably struggle to raise the money on Wefunder. So our range is like 50K to 5 million, so it's really on you to get the first 50K. And so kind of, on one hand, if you can't like hustle and make it happen and persuade investors to part with their hard-earned cash and invest in your business, you'll probably struggle. But if you can, then our position is kind of like, who are we to kind of stand in your way or prevent you from doing that?
Oh, that's really cool, man. And that's definitely, I love the fact you guys trying to make it accessible to people, right? And it's not just something where it's like reserved for this like elite few, where it, like I said previously, it has been that way, right? Where only some people can invest in these companies and really try to build themselves up, and that hurts everybody. It hurts the companies, it hurts the investors. So for you personally, on a personal side, what were a couple of your favorite companies that came through Wefunder that you've seen?
Yeah, so there's this company called Atom Limbs. They are making the world's first mind-controlled bionic arm. Really awesome founder, Tyler Hayes. They raised 1.8 million on Wefunder, and has the potential to be an amazing company economically, right? But also, we have this feature on Wefunder where after someone invests, we ask them, why did you invest in this company? And if you read through the notes there, it's really inspiring. So a lot of those investors were saying things like, I used to be a military veteran. I saw, people, my colleagues, servicemen lost limbs, and I invested because I love the idea of like helping to build a company that's going to improve their way of life, right? So that was really cool. Another great one that I invested in was Chattanooga FC. So this is a soccer club in Chattanooga, and I live in Nashville now. At the time, I lived in SF, but now I live in Nashville, so just down the road from me. I invested $125, and now I'm a shareholder of a soccer team, and my name is actually on the jersey, and so there were kind of, I think, 3,500, mostly Chattanoogans that invested and are now shareholders in the company. It's kind of like the Green Bay Packers model, like owned by the community. And again, you look at the notes, right, of everyone investing. It's like, I'm so proud to be an owner of my local soccer club. See you at the next home game. That's what Wefunder is all about.
That is super cool, actually. So really, there's not like one type of, it's not like just technology or just one thing. It's really a really wide range of businesses that can apply for those kind of things.
Yep, B2B SaaS startups, biotech companies. There's one company, Leah Labs, right now that's trying to cure cancer in dogs. Soccer clubs, movies, breweries and distilleries. It really is across the spectrum of the economy.
Dude, that's amazing. And so So what are some things that you're looking to do in the future of Wefunder in terms of growing and building it? Well, Naheed, thanks for tuning in. It's really cool to hear that small business investors can make a difference. Absolutely.
Yeah, exactly. And I give one example, right? So on the kind of investor side of our mission. So Jason Calacanis is an angel investor. He invested in Uber. He invested 25K. And when they IPO'd, he made $125 million, right? Which is a 5,000x return on that investment. At least that's the story I've heard. So our thing on WeFunder is, yeah, he was already a millionaire. Now he has 125 million more, right? Which is cool. Good for him. But what if that like $25,000 had been broken down into 125 people investing $200 each, right? Then we create 125 new millionaires versus one existing millionaire getting a lot more. And obviously, sadly, not every investment on WeFunder is a 5,000x return. Sorry to disappoint you there, Drew. And so we try to flag investing in startups is super risky. Most of these investments will go to zero. Even if there is a return, it's going to be years into the future. So it's a highly illiquid asset as well. But yeah, as the comment that was just made, like the opportunity to enable ordinary people to participate in investing in cool startups, both the potential financial upside, but also the mission and causes and just getting involved with like really cool founders trying to change the world. Why on earth should that be the preserve of, the top 5% of the population? And kind of stepping back as well, the idea that like in 2021, right, in the age of Twitter, right, in the age of Airbnb versus Hilton, right, i.e. the age of like we're democratizing like industry after industry, that like early stage investing, friends and family investing, angel investing, even venture capital, like should be kind of one of the few industries that is not being disrupted and still is the preserve of kind of centralized like institutions and gatekeepers. Seems so bizarre and anachronistic. And so yeah, like or kind of normally when startups are raising, right, it's not just they're limited to raising from accredited investors, millionaires. They're also limited to privately soliciting investors, right? So they can't kind of talk about the investment on Facebook. So regulation crowdfunding, what we do at WeFunder, changes both of those things. So now you can raise from unaccredited investors as well as accredited investors, and now you can publicly promote the offering. And both of those things just seem to me to be way more kind of in line with this, kind of zeitgeist and age of democratization of various industries. So that's one of the things we're excited about. And to your question, like, what does the future hold? I mean, we're growing very, very quickly now. I think this Q1 of 2021, we're about 5x up over Q1 of 2020, and we just doubled in March over February. And there's some new laws that the SEC rolled out a month ago, which increased the maximum amount that companies can raise from 1 million to 5 million. So I think regulation crowdfunding as a sector and WeFunder as a company is going to grow very, very quickly over the coming years. I hope that's the case. We're really excited about it.
No, that's amazing, dude. I mean, it sounds like the future is pretty big for you guys, because ultimately, like you said, it's. I love that idea of democratizing it, because it is ultimately a great way for people to just go in with a little bit of money, right? It's like the kind of whole, not to use a bad example, but Robinhood, after recent things, I don't want to necessarily highlight them, but the Robinhood type model, right, where you're able to invest $100 or $50 here, and really just, if you have that much and you really believe in something, you should be able to invest in it, right?
Yeah, I think Robinhood is actually a great analogy on both sides, right? So on one hand, yes, this is democratization, right? It's like the people versus the hedge funds. WeFund is like almost like the people versus the venture capitalists. Not really. I actually think there's a complementarity there versus like a conflict. But kind of, yeah, it's democratizing. But Robinhood is also a good example to bring up, because this is risky, right? And there is a reason why these laws were illegal for 80 years, because there might be fraud, right? When nefarious founders try to deliberately mislead investors, and investors lose their hard-earned savings by investing, in a company that they thought was like a surefire bet, and actually turns out startups are really risky. Even if there's no nefarious intent, maybe investors are not qualified to make smart decisions. the SEC has put limits on how much investors can invest. So if your income, is like kind of $60,000 and your wealth is like similar, you can only invest $2,200 per year in regulation crowdfunding. So the SEC and obviously the platforms are highly incentivized to prevent, kind of bad outcomes, especially fraud. But that is still really a risk. It's something that keeps me up at night, and all of us on the Wefunder team are, constantly thinking about how we can, do a better job of communicating the risks to investors, and ensuring that we have good outcomes for investors on the platform. But it's definitely a real kind of challenge that we will face as we build this sector over the next few years.
Yeah, and by Robinhood being a bad example, I meant in terms of them having their own goals and their own thing that they did with the whole GameStop thing, where they froze investing just because things were not going the way they wanted them to go, per se.
Yeah.
Yeah, man. No. So what are some things like, if you had to tell investors or potential like micro investors three key things, or three key takeaways for them the most important things for them to know, what would you want folks to know about Wefunder or about investing in these startups in general?
Yeah. Okay. Off the top of my head, here's three things. One, investing in startups is super risky. Like, assume, or that $100 investment might go to zero, right? And it might be locked up for years. So just know it's super risky and come into it with your eyes open on that. That's one. Secondly, our kind of tagline on Wefunder is invest in startups you love. So we love to see, like I was mentioning earlier, like the military veteran that invested in Atom Limbs because they wanted to provide a better way of life for their fellow servicemen that lost limbs, right? Or like you invest in Chattanooga FC, or Detroit City Football Club is another one that did it, another soccer club that raised on Wefunder, because you want to be an owner of your local soccer club, or this brewery down the street from you whose beer you love, like now you're an owner of that brewery, so, or a friend who you went to high school with, who's running a startup and you really believe in him, and so I think the second thing is like invest in startups you love. Hopefully you make money as well, but generally speaking, it's amazing to me how few people in those investor nodes that we see. We have a Slack channel with investor nodes. So few people are like, I'm investing to make a ton of money, that's what we want. We want people to be investing because they love the startup or this founder, as opposed to they want to make a ton of money. And then the third thing to leave people with, maybe the most important of all, is like, you can do this very easily on Wefunder. If you go to wefunder.com, there's about 300 companies now that are fundraising that you can view and browse through and read up on. And maybe there's one in a sector that you're passionate about, or in your city, or like you read the founder's story and you get really inspired. You can ask questions of the founder. You can watch the video. There's a ton of information. You can look at the financials, and you can reach out to them on LinkedIn. So it's very, very easy. You can become an angel investor for $100 in a few minutes. And I think, people think, oh, like to be an angel investor in startups is out of my reach. You need $25,000 as a minimum check size. And we just made it massively easier for more and more people to participate as an investor in startups and kind of building the entrepreneurial ecosystem that they want to exist.
That's amazing, dude. Awesome. And so I'm going to close by asking this one question that I've started to ask, and I think I like asking this question. I might make it a theme going forward. But in your career and your life, right, who are some people that were influential for you, whether they're mentors or just people that mean a lot in your life, and that kind of helped you along the way to get to where you are right now?
Yeah, so many. I think, the CEO and founder of Kiva, Matt Flannery, he hired me back to Kiva in 2011 to launch this Kiva Zip program. So that was like a big kind of pivot in my career, I guess, going from management consulting to nonprofit. It was a big pivot and a big pay cut. So I have him to thank for, having earned probably, like millions of dollars less over the last 10 years than I would have done if I'd stayed on the consulting path. Thanks, Matt. I'm poor because of you. But rich in spirit. But he taught me a lot, and kind of gave me a shot. And then Nick Tomarello, Wefunder's founder and CEO, he hired me to Wefunder when I was leaving Kiva, looking for my next gig. And it's been very inspiring to see him in action. He's, for me, like the definition of a founder who's like extremely formidable and is, will bend the world to his will. And just like his drive and intensity and the kind of the level of kind of expectations that he has for excellence, I think has really taught me a lot. And I kind of along with Wefunder's other founders, like the reason why the company is here, like 9 years into the journey, they founded it in 2012, and their tenacity and resilience over the last decade and kind of making it through the hard times and persevering. And now we're growing very quickly, as I mentioned before, and I think that growth is about to accelerate. But if you look historically, like the growth, it's one of those classic like 10 years to be an overnight success, where literally for like 8 years, it was very kind of stagnant growth, like linear, very kind of slow growth. And in the last 12 months, it's just exploded. And so kind of their perseverance and grit in making it through the hard times, I think is very, very admirable. And now, they are being rewarded with now like Wefunder is kind of growing very quickly. I think the future is super bright. But so highlight Matt and Nick as well as parents and my wife and like a lot of other people as well.
Awesome. And I think I want to highlight one thing you said before as we close here, but like the 10 years to be overnight success. I think that's the key one key takeaway as well. Is just as a general rule, like people think this, overnight successes is a thing, right? They want the quick bullet, they want the quick fix, they want to be the get rich quick person, right? But like you said, with most companies, even companies that seem to pop out of nowhere, you don't see the iceberg underneath, right? You don't see all the work that goes into building that over the course of 10, 15, sometimes 20 or 30 years. And then suddenly, boom, it's there. And it's like, oh, wait, where did this come from? It's an overnight success, but it took so long to become that overnight success. It's not actually overnight. It's more like an over decade success.
Yeah. And I think the interesting question, right, or a challenge is, sometimes you think, well, people actually should give up, right? Like, it might not, you might not ever get to the hockey stick in 10 years time, right? You might always just be grinding and ultimately fail, so how do you know when to stick at it and persevere, because in a decade's time you will come to the promised land, and how do you know when to like, no, actually this is never going to work out, and so you should just quit and go and do something else, and so like that's the very, very hard question, and I'm sure kind of people are telling you to quit all the time. I was joking with a friend the other day who, literally like a couple of months before Wefunder hit the like massive hockey stick uptick, right? This friend of mine was like, dude, you really should, this Wefunder thing is not going to work out, And like logically, if you looked kind of in the rear view mirror for 8 years, it would be like, yes, that is exactly right. You're right. I should quit. But like, thankfully I didn't listen to that advice. But yeah, it's easy to say with the benefit of hindsight, but I think that's one of the things that, kind of marks out like amazing founders, right? They just like refuse to give up. That's the only thing. There's some quote like, that's the only thing that kills your company is when you give up. But yeah, that's maybe not necessarily the same thing as advising people to never give up, keep on trying on this like stupid idea that we'll never make it out the other side. What do you think about that, man? How do you advise someone that you're coaching on, when is the right time to just call it a day versus persevere and try to make it through?
No, it's a great question, man. And honestly, I think for me, the general rule that I apply with my clients is typically, if you're doing the same thing over and over again, that's when it's time to quit, right? It's when you're not iterating, you're not taking the feedback and growing and changing things over time, because you're not growing, you're not getting feedback from the market, you're not listening to the market, you're not listening to people who are using your product or using your services and getting this feedback. If you do the same thing for 10 years, you're not going to grow, right?
So I think that's a really good point, and I think one of the things I notice about Nick, for example, our CEO, is like still iterating, right? Even in the hard years, iterating on the model, kind of learning lessons, evolving, etc. The only caveat there is that, like in the case of Wefunder, it wasn't actually those iterations that really did it for us, or at least they did something. But I think the biggest thing was that the law changed a month ago to allow founders to raise up to 5 million. Previously, it was 1 million, or allow us to do test and orders or SPVs. And so those law changes now made it like, wow, okay, or it's almost like the market timing is right, you know. And that's kind of outside of the control of even of like the iterating on the model. You kind of just like maybe luck into that, but you don't know if those law changes are ever going to come, or maybe they're going to come in 5 years, you know. So but not, I totally agree with what you're saying, but a lot of it I think oftentimes is unfortunately also out of your hands.
Yeah, I mean, in terms of what you can control, yes, absolutely. There's absolutely things out there you can't control, like for example, just market demand or whatever's out there, like the laws changing. Yeah, those kind of things you can't really do much about, right? You can try to lobby and try to do what you can, but you can't do much in terms of actually making that stuff change. But it's not in terms of doing whatever you can do on your side. If there was no indication that law was ever going to change, then yes. I mean, at that point, it's like, okay, well, this is only we're capped at this. We can only get to this much, and is it good enough to stay there and figure that out? And then the other thing is just having a vision for the future, right? Like keep planning for the future. Don't just like figure out like what's going to happen next week or tomorrow. Look at a year from now, 6 years from now, 5 years from now. You know, what kind of plans and what kind of strategy do you want to have for the future, for yourself or for the business, and then kind of iterate on that. But yeah, to your point, there are things you can't control, and that's a harder question with the stuff you can't control. But you got to focus on what you can control, right? That's all you can do.
Mm-hmm. Yeah.
But Jonny, this is awesome, man. Thanks so much for coming on. Any last minute thoughts you want to leave folks with before we end?
Yeah, I think like in terms of like, if you want to get involved or learn more, wefunder.com. As I say, you can become an investor if you want for $100. You can browse through companies and become an angel investor very easily. And then if you're a founder, you know, we help founders raise 50K to 5 million. I think it's a relatively easy way to raise money because you can publicly promote and you can raise from everyone, not just rich people, and you get in front of Wefunder's million-strong user base in like email marketing that we do. So, and then you're also, you know, if you raise $1 million on Wefunder, it might be from 1,000 people, one line on the cap table, but that's 1,000 customers, brand ambassadors, supporters, champions. So I think we believe that can do really good things for your business as well, probably your psychology too. So if you want to, you know, learn more about raising capital on Wefunder, again, go to the website. You can find all the info there, and I'm hoping we might be able to help you.
Absolutely. We'll put the link in the description below too, so folks have that, that they can get there easily. But Jonny, thanks so much again for coming on, man. I appreciate it. You know, I know you got a busy schedule. You took some time out to be here, and I really appreciate that. Thank you to you all. Thanks to Naheed for tuning in, and other folks who joined. I may not have said anything, but for those of you watching concurrently and watching after the fact, thanks for tuning in. Hit the like button, hit subscribe, share this video if you think it'd be helpful to somebody. If you know someone in your life who's thinking about starting that business or has an idea and they want to try to make it happen, reach out, find out about Wefunder, check it out, see if it's for you. It might be able to help you and take the business to the next level. So thanks again, Jonny. Take care, everybody. Stay safe and have a great weekend. I'll see you guys